Brad, who you want to call on?
Max.
Let's go for it.
Okay, what's this say?
Daddy Warbucks invested in two new ventures, which are BeReal.com and Horse and Buggy International. He contributed $100,000 to each venture. He was required to guarantee $1.5 million of the debt associated with Horse and Buggy International. Daddy Warbucks received a 1065 partnership K1 from each of the new ventures. Daddy Warbucks spent 450 hours on the board of directors of Horse and Buggy International, and he spent 100 hours on the board of BeReal.com. Horse and Buggy International generated $600,000 loss, and BeReal generated $500,000 in income. How much of the $600,000 loss can Daddy Warbucks deduct?
Anyone?
It depends
On.
if he has sufficient basis
Has sufficient basis.
to take the loss from Horse and Buggy International.
Okay. So you're saying, are you referring to the first hurdle, Matt?
Correct.
Okay. So what's the first hurdle? I mean, what data do we pull out of there to diagnose, as Sam would say, whether we can get over the first hurdle?
He contributed $100,000 to each venture.
Yep, he has 100,000, and then what?
Then we want to look at the at-risk basis.
Well, just debt in general.
Okay, so he has 100,000 and he has a 600,000 loss, so he can deduct.
So, but he contributed 100,000 to each venture. He was required to guarantee how much?
1.5 million of debt.
Okay. And what kind of entity is Horse and Buggy International?
Partnership.
Okay. So if it were an S corp, and I don't know if I'm probably doing the second one. Okay. So how much basis do we have in order to assess whether we get over the first hurdle?
For Horse and Buggy, you'd have your original contribution of $100,000 plus your guaranteed debt, which I'd imagine is recourse.
Guaranteed even first recourse.
So of 1.5 could bring us 1.6, but you'd also have a law, I guess.
So
you're
the-
1.6, so you have enough basis to
So picture it as a hurdle.
at-risk law. Yes.
Right? At the beginning of the hurdles, how much loss do I have to jump over the hurdles?
You have 600,000 of loss.
I have $600,000 of loss. Okay? So does that $600,000 of loss jump over that first hurdle, and why?
Yes,
Why?
because you have basis.
And what were the components of basis to,
Your original contribution, and then your debt of 1.5 million.
okay? What's the next hurdle? So the 600,000 hopped over the first hurdle, did it not?
Yes.
It did. Now is it going to hop over the second hurdle?
Yes.
Okay, and how did you come to that point?
Because you have to take a look at which, which you can deduct it against. So if it's recourse or qualified non-recourse, you could take losses against that basis.
Or acquisition cost.
Or acquisition costs, yes.
Yep.
But non-recourse, you can't. This happens to be recourse.
But you're saying that because this is an S corp?
This is a partnership.
If it were an S corp, would you have the same answer?
No, because you can't take basis in
You could not.
your debt.
So we're a
unless
partnership.
Unless it's contributed by the shareholder.
So we're able to jump over that.
Correct.
Okay. And then what?
Passive netting. So since he spent 450 hours, if you're not grouping them, then it would be passive activity.
Well, Horse and Buggy and BeReal don't feel like they can be grouped, do they?
No, it doesn't seem.
Is BeReal even still a thing? Is it? Okay.
I mean, they're both with the past, so I don't know. You might be able to make a.
They're both from the past. No, there's no grouping election to be had.
Anyways, you'd consider that passive, but at the same time, you could also consider, what is the other one?
They're both passive.
They're both passive, so you can net them against each other.
Okay, so how much loss do I have?
600,000,
How much income do I have?
500,000.
Okay, so at that hurdle,
You can only, you can't go any, you can't, what? You can't, how do I say this? You can't take passive losses in excess of your gains.
okay, so let's talk about how this manifests in the tax return. Okay, your Schedule E is going to have, if this is your only two activities, your Schedule E is going to have 0. But your input when you put it into the system is horse and buggy is going to have a $600,000 loss, and Be Real is going to have a $500,000 income. For Matt, Luke, and CV, what is the form that passive reporting occurs on?
Yeah, Schedule E.
Do I?
Schedule E.
Nope.
Oh, 89. 85, 82.
I tried so hard, guys. And I don't know what.
Thank you.
Okay, 85, 82. I gave away a gift card while you were gone.
That's fine. Makes
Okay.
it easy for me.
No, there's still 3 left.
Oh. Sorry.
Okay,
There's
so
only one.
do what?
Thought there was only one, you said.
No, I got 3 left. I said you get to do the next one, but I lied evidently. I do a lot of lying in here. So the 85, 82 has a section that says, "What is your passive income for the year?" It says 500,000. What is your passive loss for the current year? 600,000. So it takes that 500,000 and offsets it against that 600,000 to do the netting on the form 8552, and then it says, well, was there an excess loss on this form? Yes, there was. There's a $100,000 loss. So now on the 8582, you have a $100,000 carry forward, and as Stuthman said earlier, the carry forwards that print out is going to say you have a $100,000 carry forward from horse and buggy as an 8582 passive loss. Is that what it says?
Yeah.
It does.
Yep.
Okay. Max, who you want to call in?
Chris.
So the answer is 500 now.
Chris, what's 2 say?
How would the answer change if he did not guarantee the 1.5 of debt on behalf of horse and buggy?
Okay, so this is a little harder. Okay, because now we have, in Max's scenario, we really only had one piece in play. Okay, there's multiple pieces in play now. So let's take it slow.
So now it's non-recourse.
It's non-recourse.
And for basis and loss.
Your first hurdle is what? So you got 600,000 that starts at the first hurdle, correct?
Correct.
Okay.
So you have basis in your acquisition cost of 100,000, and then you have basis in your non-recourse of 1.5.
Yep.
So you clear the first hurdle.
Correct.
Second-
Everybody agree with that so far? Yes.
Would the acquisition cost be 200K because it's set 100K to each venture instead of?
Nope. It's going to be very specific to the venture.
Okay.
So you have 2 things that need to be accounted for: horse and buggy and Be Real.
Okay.
So the acquisition cost is going to tack to the specific item purchased. Okay.
Hurdle 2 is the at-risk basis, and so acquisition cost of 100,000 has risk, but non-recourse does not. So you don't clear that hurdle.
You don't.
Not in a partnership.
So everything got tripped up at the at-risk.
The non-recourse, yeah.
So, but something else exists, right? What was it?
Acquisition
And how much was that?
100. So
So now you have do you have two things that just happened there? How much is available to hop over that,
Is it the 100K?
the 100K?
Would that go to Form 6182?
The 500?
Yeah.
There's 600 of loss, 100 hops over,
Yep.
correct? 500 stays behind.
Yep.
And 500 stays behind because you had an at-risk limitation that tripped you up.
Yep.
Correct?
Yep.
So now that 500,000 is reported on 6198.
6198.
Okay, so now you had this trip up that occurred. You have one loss globally of 600. 100 jumped over, 500 got left behind. So now you're into what piece next, Chris?
So 100 jumped over, and now you get to net your passive loss against your passive income, but you only get to net that 100,000. So then you'll report 400K of passive income.
Correct. So there's no passive loss carryover because the universe of passive income fully consumed the passive income that jumped over the basis hurdle, that jumped over the at-risk basis hurdle. In both instances, in the basis hurdle, 600 jumped over. In the at-risk basis, 100 jumped over. So 500,000 got left behind at the at-risk hurdle that we're waiting for contribution to capital, recourse debt, we're waiting for K1 income, we're waiting for some event that's going to release that $500,000 that got captured by that at-risk hurdle. But 100 of the 600 hopped over, leaving 500 behind, and that 100 then got to the passive netting. So now we have to ask ourselves, what other passive income do we have? Be real is passive. So my 8582 is going to say passive income of $500,000, passive loss of $100,000. 400,000 is going to be a positive number on that 8582. And remember how before we said Schedule E was 0? Well, Schedule E is now going to show $400,000 of income because it escaped off the 8582 by virtue of that the income number being larger than the loss number. All that makes sense? Kind of? Maybe? Stuthman, did that make sense to him?
I think so.
Stuthman just spoke for you guys. Oh, look at this. Where's my recourse, non-recourse? No debt. Oh, shit damn. Look at this. Okay. I forgot I put this in here. Okay. So 2A says all activities with net income and all activities with loss. So in the first example, we said that the loss, by virtue of the debt being recourse, hopped over the basis hurdle, it hopped over the at-risk basis hurdle, and it got to the passive netting. By virtue of getting to the passive netting, the loss line of 2B is populated with $600,000. We have $500,000 of income, so now we do this netting process. This comes down to, oh, and this is prior year unallowed losses, and you get a number over here that is negative 1,000, and then you're going to look at this and say, well, it gets hung up. That negative 100,000 is going to get hung up, and next year, that negative 100,000 is going to be 2C on here, because that's the carry forward that got barred the year before. And the 6198 wasn't in play because we jumped which hurdle, Max?
Sorry, I was.
That's right, the
definitely
at-risk
zoned out.
hurdle.
Got it.
That's right, we hopped the at-risk hurdle. This is the Form 6198 at risk. you know, and the thing about at risk, which is interesting, is you're going to see ordinary income, gain from disposition of assets, Schedule D, 4797, in all these various categories. If there's an at-risk limitation that kicks in, what should happen, and I don't know what happens in the system now, what should happen is if I have an ordinary loss that's on the form, a short-term capital gain or loss that's on the form, and I have a 1231 loss that's on that form, so now I have 3 different categories. And Sam, why do we have separately stated items on a K1?
To diagnose.
No. Why do we have separately stated? Matt?
So they can be treated differently at the individual level.
So they can be treated differently at the individual level, right? So those items could all be treated differently, correct? So by virtue of hopping over these hurdles, well, I got tripped up at risk. So what the at-risk form says, well, wait a minute, I have $100 of ordinary, $200 of short-term capital loss, and $300 of 1231 for a total of $600 that got limited. What 6198 does is it says, I'm going to capture those individual buckets. And when there's $600 of capital contribution or $600 of income that occurs the next year, the release that was captured by the 6198 is going to retain the characteristics it had in the year before. So if there was a $600 capital contribution, 6198 would release a $100 ordinary loss, a $200 short-term capital gain, and a $300 1231 gain or loss, and then it's releasing your return for now, Sam, diagnosing how to treat it. Okay, so that's why some of these lines up here segregate out these different items. So then you come up to this adjusted basis. You have adjusted basis, increase, decrease, coming then to basis, and then you do this computation at the bottom to see what's going to be released. Okay, so 6198 is the form that you have to utilize when you trip over the at-risk portion of the basis hurdles. The 8582 is the form you utilize once you're over at risk and you have to do the passive netting. I don't know if that's post-it worthy to remind you where those pages are in there or not. You guys do you.
Hey, Pete, I
Yeah.
think this might be, what happens on this? What hurdles do you need to go through for a Schedule C? Did you cover on that at all?
I've never had anything, I've always taken a Schedule C loss and
That's-
never
yeah.
run through the hurdles.
Well, that's what I think
But,
it's worth mentioning that typically Schedule C, you can just deduct the loss.
yeah, but that didn't make it right.
I know,
Okay,
I
so
think it's worth mentioning.
100%. So where Brad's going on this, K1 is automatically going to shove these numbers through, and maybe it's the fact that you can be sued for an AP. That's probably it. That has to be it. Okay, so he asked a question. I had to think about it for a second. How often today do we see LLCs? A lot. How often do we see general partnerships?
Not a lot.
How often do we see limited partnerships?
Far less than LLCs.
Far less than LLCs. Okay, and so I'm going to talk about general partnership for a second. If Brad and I were general partners in the partnership, and there was an AP on the general partnership books, is the AP on the general partnership books at risk to me and Brad? Yes or no?
Yes.
It is. Because at the end of the day, there is no limited liability shield with respect to liabilities in a general partnership. As a general partner, you are agreeing that you're going to take care of whatever debts you have, and people that do business with the general partnership have recourse against the partners if they so choose. So as Brad asked that question, I thought, well, wait a minute, AP, that's probably not recourse. And then I put it use the lens of a general partnership, to say, well, the general partnership partner is subject to being sued, therefore it's recourse. Therefore, the same manner a Schedule C person would be subject to recourse. But what if Brad's conducting business in a single member LLC? So now let's play with the concept. This is a spectacular question. Which makes me happy, and no. Because to say I've really thought about this much would be a lie. Okay, so we have BS Consulting, Schedule C, and we have Schedule C, BS Consulting. Single member LLC. Okay? So BS Consulting, and that just does crack me up, makes me giggle a little bit.
I grew up with that.
Did you?
Yeah.
Okay, I grew up with some other stuff too. Okay, without the single member LLC, Brad can be sued for his AP. But if you put BS Consulting in a single member LLC to limit his liabilities, which I've never done, I've never considered it until Brad just asked this question. Is an AP in a single member LLC recourse to Brad in the same way it's recourse to him without the LLC? It's not. So if I sue BS Consulting LLC for non-payment, he has a liability shield. And technically, the analysis of the hurdles, basis, at risk, and since it's LLC, the passive netting probably goes away because he's got to be active, I would think. And then excess business loss. Wrapping in an LLC seems like it would bring it into that analysis to me.
I've always just said, Schedule C loss, take it.
100%.
Yeah.
100%. But again, I've never really considered this till this moment, right now. But I could see the IRS making the assertion that a Schedule C wrapped in an LLC could be, let's see. Okay, what do we have here? Who was the last? Was that you, Max?
I think it was Chris.
Chris? Chris, who you want to call on?
Let's go Carter.
Carter, what's the first line say? What's the balance sheet say? Read all the way through one at the bottom.
Read through what? You said read through one?
Yeah, all the way through one.
Okay.
Speak loud.
Yep. Payton Industries is a manufacturing company. The following is the December 31st balance sheet. For their assets, they got cash at $5,000. AR trade is $200,000. Their other AR account is $150,000. Inventory $300,000. PPE is a $1.5 million. Accumulated is $551,000. Building $5 million. The accumulated is $1.025 million. Land $350K. Total assets of $5.9 million. Liabilities and equity, they got AP of $100,000. Notes payable of $500K. Notes payable for land and building of $5 million. Equity for Kaylee is $100,000. Brett $100,000. Steph $100,000. Current year facts, the following is the time that was spent working on Payton Industries. Kaylee had 750 hours, Brett had 500 hours, and then Steph had 250 hours.
Okay. So this is my favorite. Okay, so do we say what year it is on here somewhere?
22.
22.
22? Okay. So they're saying there's on the next page, there's asset 1, 2, 3, 4, 5, and 6, and building of 3947. Okay, and then on the next page, so you have a basis schedule for 2021 for Kaylee, Brett, and Steph. So in 2, it's saying, assume the Peyton Industries sold asset number 5 for 500 grand and abandoned asset number 4. Construct a profit and loss statement, assuming the sale of 5 and 4 are the only activity. Reflect the income on the following 2 returns. Assume a 30% tax rate. Kaylee has a W-2, 300,000, Brett 25,000. Steph has an ownership in a business she does not participate that has 150 of income. Each shareholders are owed 50,000 to the Is there a $150,000 note receivable?
Yep.
Okay. And Steph loaned the corporation 500 grand. Let's see. This is awesome. Wait a minute. Max and Jackson get to work together. You two, Chris and Connor work together. Matt and Sam work together. Luke and Connor work together. And Allie and Carter work together. And I want you to formulate what the answer is for both an S Corp and a partnership on what the loss is that they can take against their W-2s and where something may or may not get caught in the loss hurdle.